is your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, boring, and stale information and package it up in a fun and sexy way without my co-host, David. But you got me. You also got Kyler in studio. And also, we cannot forget the Don running the production, the Wizard of Oz behind the curtain, the Italian Don here himself, Rocco. So, guys, welcome to another exciting episode of Sin City Crypto. Today is Friday, also known as Forrest Friday. And so we will have Forrest joining us in T-minus 27 minutes.
You got the Forrest emoji drop in the chat.
That's right. Also, do us a favor. Hit that like button. Let's fill this thing up. When we get to 275, we are going to open the club. I know there was a debate on why we didn't open up the club on our FOMC meeting. The only reason we didn't, because we didn't cross 300. We had raised the stakes for a high view count stream. We were expecting a bigger turnout. So let's take first of all, before we get into it, I do want to say Bitcoin's trading at its normal zone of $23,000, which we'll get into the charts here a little later with Forrest. But before we get too into the weeds, I want to discuss a few things that I have seen on Twitter. And so let's see here. This right here is the NFT project's roadmaps versus the NFT project's execution. So this is what you see, what is promised, the expectations, and then behind the scenes, what is actually happening. It's a bait and switch. And
I didn't understand. It took me a second. I didn't understand.
Rocco, that looks like it could be your brother there posing.
I don't understand because
this guy looks so douchey.
So serious, bro.
He's got a mock turtleneck.
It's
on.
a masterpiece. Huh?
The mock turtleneck. Kyler, have you ever owned a mock turtleneck? You ever wore one? Not the full turtleneck. Not going up to the bottom of the jawline, but halfway up.
I think I had one for like cold when I would go snowboarding and stuff, but not. I don't know. I never.
I bet the guy
I never looked like that guy.
Serious is the producer. You never ask me to do that, please.
Why is he posing though? Why is he?
I don't. Just don't do that to me, please. Okay, I refuse.
All right. Anyways, also, just in, Solana-based Everland Finance announces shutdown due to the lack of liquidity. So projects are leaving, community are leaving, total value lock is leaving, and we're seeing a lack of liquidity and one of their biggest decks is there. And so is this a sign of what's to come? Is this a sign that the community is no longer interested in Solana and they're going elsewhere? Perhaps. Or maybe we're just at the bottom.
Au revoir, Solana. Miss you already.
Yeah. So and then we have we can't have a Twitter analysis without good old Joe Biden. He's quote here: more than half the women in the administration are women. So
just to clarify.
Hold on, Rocco, you got some sound on this thing here?
It should be playing, yeah.
All right, here we go.
More than half the women in my cabinet, more than half the people in my cabinet, more than half of the women in my administration are women.
Okay. Well, that's good, man. Because sometimes, nowadays in the environment we live in,
you did have to clarify that because I've seen some of his administration.
You can play both sides. Play both sides of the team here. It's we'll leave it at that. All right. So then now, whalechart.org, also known as just Whalechart, they have a pretty good beat with reliable sources. One of the Twitter handles that we follow for breaking news and insight. They say there's a wild theory that the price of Bitcoin is being propped up. The academic who proved manipulation in 2017 suspects it is happening again. And so is this essentially whale manipulation? That's what it all boils down to. Is it whales moving the price to a desired location? Or perhaps this is the recourse. Maybe the whales were pushing the price down and they could only hold it down for so long. It's like a beach ball trying to hold it underwater. And you can only hold it down for so long before that thing pops up. And maybe they were trying to suppress the price to 16,000, did it effectively for almost 2 months. And now the market is like, hey, we want Bitcoin and we're ready to buy it at 20,000. And this is maybe the new low or the new floor. And 16K was just a facade that the whales had manipulated. And then lastly, Bitcoin Archive, which is another one of our go-to handles that we follow for breaking news and reliable information. Just in, Apple considers cryptocurrencies a Ponzi and deliberately made the App Store approvals vague and difficult. Ex-head of Apple's App Store. So is Apple trying to fight a battle? Are they trying to suppress the cryptocurrency movement and the integration of crypto in the App Store and in their ecosystem? It seems to be the situation. They probably think it's a Ponzi, which I think is kind of the overall general consensus. And here's an effort for them to subdue the integration.
It's probably because they can't get their 30%. Like all transactions through the App Store, they get a big cut of it, don't they?
Yeah.
So if you were to go outside of that with a crypto, it probably would circumvent their ability to tax it.
Well, you'd think they would want revenue, regardless of where it comes from, and perhaps it's just the heads of Apple being hard-headed and being like, you know what, we don't want the exposure, we don't want the risk, even though Web3 is full of risk. You have to agree that Web3 gaming, a lot of it is kind of a cash grab, might not be as well built out as some of these bigger studios that are developing apps and games. And maybe they just don't take it seriously and don't want to risk it. And so instead of addressing the issue at face, they are just deliberately making it vague and difficult to build on that. So
it could be.
All right. So let's take a quick peek. Guys, if you are new here, and gals, if you're new here, say hello so that way we can drop an hola back at you. We want to get this party started. We got 80 people in here. It's quite low compared to where we normally are. So, and only 30 likes. Come on, hit the like. And then like that, we can fill this up and then we can get the party going. If you're excited, you know what? Let's get the chat going. If you're excited for Forest today, put a 1 in the chat. If for some reason you're not excited for Forest, put a 2 in the chat and then we'll make fun of you. All right. And then let's take a look at where Bitcoin's at. We have Bitcoin coming in at $23,461.15. And taking a look at the chart here, this is on the 24 hours. You can see that we've had a little pullback at the start of the show. Yesterday, we were at 24,000, but on the week, we are still slightly above where we were. And then taking a look at the month, you can see that we have our my favorite charting technique called the ascending stairs. And so, as you can see here, we are stepping up our way up. So, and then take a look at some of the biggest gainers and losers for the day. We have at the top Immutable X, which had a significant run up, still up over 43% on the week. Terra Luna Classic is also up as well, 11%. So some big rallies there. We got Magic, not to be confused with our charting buddy, but I don't know anything about this project. I will look into it to see if it's something credible. But if you guys know anything about Magic, let us know, and we'd like to take a look at it. And then some of the biggest losers, we got Ethereum Proof of Work, big pullback, down 11%. Don't know why this is pumping. Also, DYDX, this is also retraced, had a big movement this week as well. And Aptos is also down. So looking at the Crypto Fear and Greed Index, people are feeling a little more bullish. People are piling in, man. It was only a month ago we were in a fear, and I think it was like 2 months ago we were in extreme fear. And so the sentiment of the market has changed, at least in the Bitcoin sector. And lastly, you can get a visual representation of the week here. Phantom up 36%. And then once again, you can see on the daily what this looks like. Kind of more red across the board than there is green. But there's a lot of volume and movement in the alt space. And then the market, we did have two green days in the stock market. So a retracement here, NASDAQ down 1.4%. So kind of surprised that we haven't seen a bigger pullback in Bitcoin, but at the same time, we never had that giant rally in Bitcoin either. So now that's all I got there, man. I think it might be time, man. What do you think, Kyle? Do you think it's time?
Time to bring on the forest.
It's time.
See the forest.
See the forest through the trees. Let's go. Split these two cameras and bring my man up in here in the middle. Hey,
what's happening?
What's up, Forrest? You got him muted there, Rocco, I think.
Oh, can you hear me now?
Oh, we got you.
Yes,
Yeah, we
sir.
hear you, bro.
Sweet.
What's happening?
How you
Not
doing,
much.
man?
David texted me earlier. He was worried that you guys would just be looking at memes all day. So,
You know, we actually started the
Sent
it
show. Take a look at this meme here. This is Rocco, you pull up my my laptop. This is a good meme here. This is literally when David's not here, what we do. So NFT projects roadmap versus NFT projects execution. And so you can see this is what's promised, and then what people expect, and then behind the scenes what the devs are actually doing. So there you go.
butt crack. Nice.
Yes. The old bait and switch.
It's actually where the coins come from.
I still don't understand what it is, but
You still don't understand? It is
I'm confused.
It's
Okay.
like when they sell stuff on TV.
Well, let's move on.
Yeah. All right. Forrest, man. First of all, we played your video on Monday about the JED stablecoin, which we kind of discussed actually for about 2 weeks. It kind of put up an interesting narrative that, well, first of all, the name sucks, and could have been designed better. You know, we did a little research. So JED actually means stability in I forget what language it is, but anyways, it translates to stability, which makes sense for it being a stablecoin. So that's kind of where they derived its name. Doesn't make it any easier on the memory and the kind of recognition of what it is supposed to do. But we did see the launch of the JED stablecoin as well 2 days ago, and a lot of total value locked. Over $27 million worth of Cardano, or the ADA token, directly locked up, providing over 500% collateral for the JED stablecoin. So off to a good start, or at least it seems so. And I didn't really think it wouldn't. I didn't think it was going to have, the community was kind of buzzing about it. So not surprised. But before we get into any of our articles here, what do you think about Cardano, about this whole JED thing? What's your first knee-jerk reaction with JED? Are you still hating on it because of the name, or what's up?
No, I think it's good. Like, I do think the name is stupid. I think that's going to directly affect adoption in a negative way. I think it would just be adopted faster if it was more clear that it was a stable coin. Like, if you are a Cardano person, if you are into Cardano, yes, you know what it is. But somebody who has just been living outside the cryptoverse or outside of the Cardano verse, they come in and they see a token called DJED, and their first inclination is that's not a stable coin. Their first inclination is that's some sort of coin that's just trading around $1 today. And I just think it's gonna hinder adoption. I wish they would change it. I hope that they'll change it. It seems like it's not that big of a deal, but I think it could potentially be. That being said, I think it's good. I think I didn't do a deep dive on it, but just looking at the page and looking at the way it's kind of collateralized and then algorithmically backed as well. The collateralization ratio is algorithmically incentivized. I think it's a net positive for Cardano. Honestly, the thing that I think keeps so many hardcore crypto natives and DeFi people out of Cardano as an investment is the lack of TVL and the lack of a DeFi ecosystem on Cardano. So I think if DeFi can pick up on Cardano, you're going to see a lot of people move and take advantage of some of the opportunities that we're going to see. Looking at Cardano TVL, yeah, it's starting to spike and pick back up. It looks like we had an all-time high in TVL of around 320 million. It's already back at 102 million after taking a dip down to 50. So this is good. Good for Cardano. I think the other thing that keeps a lot of people out of Cardano as an investment in particular is the fully diluted market cap, like the valuation of Cardano itself as compared to its TVL. Because when you chart that against stuff like Solana, stuff like Avalanche, stuff like Ethereum, you see the high TVL of like all these other big layer ones. And it's like, that's where the money's at. And you can justify from an investment perspective getting into something that has a ton of value secured on the chain. Now that Cardano has a stable coin and we may see some TVL creep in, that to me makes Cardano more attractive. So I think this is an all around net positive for Cardano. Name still sucks though.
Do you think that like if DeFi continues to gain traction on Cardano, that people will be holding their money in JED to use to be able to transfer back and forth?
Yeah, I mean, if people do with use USDT and USDC and DAI, I see no reason. Obviously this is a brand new stable coin, so it's like I think people want to see it, battle tested a little bit. Like people have, faith in USDC, even though it's kind of a centralized solution. They have faith because it's been around for a little while. DAI, like DAI on Ethereum, has been through a lot of Ethereum crashes and still held up its peg. Even USDT at this point is as shady as it is. It still has a ton of TVL or a ton of people. It has a large market cap because people do trust USDT to some degree, even though they're shady, because it's held up through significant downturns. So I do think there's kind of you got to pay your dues. You got to prove I'd like to see how JED does in the next big crash. And I see no reason why it wouldn't hold up. But, I think that'll be, it needs to be battle tested a little bit. But I think over time we should see people creep into it.
It does seem like it's the one sector, the major sector in Cardano that is kind of lacking. They do a very good job. If you've ever tried to stake Cardano, there's no like lockup time period. It's all done on chain through a third-party wallet that they've created. There are multiple wallets you can stake from. They've broken down the staking pool so that way they don't get too powerful or have too much sway or pull in the markets. NFT sector has been booming. And I think one of the strongest suits of Cardano is the fact that they have a vocal leader that can translate the direction and the roadmap and quell fears when any issues arise. We saw the nodes significantly slow down last week, and I came out and addressed the issue immediately with an emergency stream. And so I think that is something a lot of projects don't have, is kind of this vague of mystery where you have to rely on third-party journalism, like say CoinDesk or something, to get what's going on instead of having a public figure that has a big community. But NFT sector is pumping on there. That's got tons of growth. We had the Cardano ecosystem, the Cardano CNFT Con, so their convention, and we traveled a lot of conventions, and that thing was big. It was almost as big as one of the Bitcoin conventions, and so it was kind of interesting to see how many people are behind it. But the one thing they haven't had is DeFi. They have the Sunday Swap, a handful of other dexes. They're laying the groundwork. They're building. There's a lot of devs on Cardano ecosystem, but I think that that's the one thing that they could really use because it's cheap and fast too. I know transactions generally fall around 25 cents, 10 cents per transaction, so it's not the cheapest in blockchain, but when compared to the likes of Ethereum, it is vastly more efficient to move value. And yeah, what is the Cardano chart telling you? If you want to maybe get into that, followed of course by like Bitcoin, or if there's any charts that you find intriguing or any kind of good values, what kind of let you decide the direction. But I know we were talking about Cardano, so maybe let's take a look, see if there's a value there. We had the chart here pulled up on our side, but 40 cents. It was only 25 cents at one point. I actually scooped some up, exited my position last week when it was hit 38 cents. So, yeah, what's the charts telling you?
Yeah, absolutely. So, yeah, to your point on the NFT ecosystem, first briefly, I mean, I briefly pulled this up. Cardano's sitting number 3. That's kind of a big deal to me. Obviously, Ethereum number 1 is way ahead of everything, but Solana has been comfortably number 2 for quite a while, and now you've got Cardano NFTs really making a stab. I mean, ahead of Polygon, and Polygon has had a couple of interesting projects drop, like the Trump NFTs and the Reddit NFTs. So now Cardano's like really getting in the mix here with NFTs. And if you can bring people over to a chain through NFTs and users onboard them into a chain through NFTs, that is a phenomenal way to add value to your chain. So, with the Jed stablecoin too, with potentially helping out DeFi, Cardano's looking better and better to me every single day. It's just been kind of the tortoise in terms of tortoise and the hare. It's the hare during a bull market, but kind of long term in terms of their development strategy. It's been a bit of a slower, steady pace. But my outlook, I always say this with Cardano, it pumps like crazy in a bull market. And we are in a bullish time frame right now. So I personally think we're in a bear market rally. I think we're going to see something really similar to what we saw last bear market cycle, where Bitcoin maybe pops up to 30K, maybe 35K. And then we come back down and maybe test some lows again. But in the meantime, altcoins really haven't pumped yet. I'll look at the altcoin. They've pumped. I can't say that they haven't pumped. Altcoin dominance hasn't pumped yet. We'll get into that in just a second. But just looking at Cardano here, we've started to break this bear market structure, breaking these downtrend lines, and that's bullish. You do have to be careful of a little bump and run action here, where we come back down to retest this range. I think Bitcoin is due for a little gut check. We'll see if that happens, but things are looking bullish, and it's hard for Bitcoin to correct when we go and take a look at the S&P 500 here, which is down a little bit today. I think the jobs report came in like super strong, so that could indicate more tightening on the way. But if you just look at the S&P 500, bear market structure has been broken. This looks bullish. Again, you do have to be careful of a little bump and run here, which could be, allow us to go higher. But a lot of times you break through a downtrend line, the market wants to retest that from above. So a lot of charts, both altcoins, Bitcoin, and legacy charts, really looking similar here. Looking, breaking their bear market downtrend lines, potentially looking for a retest of them, but otherwise, a lot of stuff is accelerating. So we look at Bitcoin here, and I'm happy to look at any charts. We look at Bitcoin here. The one thing that I'm a little bit weary of is, do we get a little bit of a gut check here? Do we come back down to retest this 21-week simple moving average, which is sitting right around 19K right now, starting to turn upwards? So do we come back down to test 19 to 20K to make support on that before moving up higher? Well, on the daily, we do have bearish divergence. And the thing is, though, Bitcoin's holding up incredibly well because, in my opinion, in large part because the S&P 500 has just kind of been screaming this week. So we'll see. I think any dips will probably get bought up pretty aggressively. So I don't even know if we'll make it down to the 21-week simple moving average. I just do know that this trend here, or this latest move, is pretty extended. We're consolidating. And a lot of times what you'll frequently see, I'll zoom into the 4-hour here, with these continuations, you'll see kind of a pattern like this, where you get that consolidation, right? And then you get the gut check, right? The sweep of liquidity down here, and those buyers come in and say, no, this is going higher. And we're actually starting to see that pattern right here. So I think what is very likely to be next is probably a little Nike swoosh like that. And this is kind of the opposite pattern to what we saw so frequently in the bear market. Right, where in the bear market we would see basically the bear flag right? We'd come up, take out the liquidity. It would look like we're going back up, and then it would fall back down, right? Same thing over here. You see your consolidation, you go up, take out the liquidity, fall back down. Same thing over here, right? You see your consolidation, you run it up, come back down. And we saw over and over and over again repeatedly. And now we've kind of reversed this trend, and we may very well see it in the opposite direction, where we sweep the liquidity, maybe come back down, maybe we test 1920K, but the market is extraordinarily bullish right now. A lot of bullish signals firing. I just want to be very careful about not jumping in at the highs. But what's happening right now is we're starting to see a shift here. If I go to altcoin market cap dominance, and I'll remove the drawing tools here, and just looking at the weekly here, we saw Bitcoin dominance go up and altcoin dominance fall downwards. We're just now starting to see a little bit of a bump in altcoin dominance, despite the fact that if we go and look at the charts, we go to CoinGecko. I had this magic token pulled up because you were briefly talking about it earlier. We're seeing some really big pumps out of the altcoin market, 20+% in a lot of different coins this week. But even with just this, even with all of that, we still potentially have a lot of room to run in a little altcoin cycle here. And this wouldn't even be like a full-on alt season like we've seen in the past. This would just be a return kind of to the top of our range. Right? I kind of drew that sloppily, but you get it here. Like,
do you
yep,
think? So what we saw with the pandemic shutdown in March of 2020, we saw the price of Bitcoin hit 3,000. I think it was. It kind of went down there very briefly, and then it seemed as though it was a black swan event that just spooked the markets, and it just traded somewhere it shouldn't have been. Realistically, it would have probably not got there if it wasn't for that doom and gloom news. Now, you think that the 16K that we had, do you think that is also a price that we ended up going to because of the doom and gloom of the FTX? Do you think that was not really a bottom, but it was more like a flash crash that just lasted a little longer than, say, the pandemic closed down? I know it was 2 months, but you think we're gonna get back under 20K? Because I got this feeling, and maybe it's just this bullish sentiment. Maybe the fear and greed index is right, and maybe I'm just along for the ride and I'm kind of delusional. But I feel like 16K, I don't think we're gonna visit it again. And I think a lot of it is just because the market was just throwing up on itself because of the FTX debacle. And now that we move past it, people are happy picking up Bitcoin at 20K, knowing where the price will go.
Yeah, absolutely. I think we've gotten this first big bear market rally, and it's coming after we finally, now that we've actually bounced here significantly, the market is going to be really comfortable knowing that there is demand for Bitcoin, strong demand for Bitcoin between 15 and 19K. At the time when this was falling, you had all these predictions, people saying it was going down to 3K, people saying it was going down to 6K, people saying it was going down to 10K, right? But ultimately, where this local bottom has come in, and potentially the bear market bottom, and where the demand came in was significantly at 19K. Then we got FTX, which is very in line with this kind of, just look at the shape of this. You had the capitulation, the distribution or the consolidation, and then a return back up to the prior range. That's exactly what happened here. FTX collapsed, we got our accumulation, and we returned, right? And then afterwards, we got the bear market rally, right? And then it took COVID in 2020 to actually bring us back down to these levels. But again, that's where the market was very comfortable bidding because that demand was there. So now we're in a bear market rally. I personally don't think we're going straight to all-time highs. I think that's going to, require the next Bitcoin halving approaching for that to happen. But I like this. I personally like this kind of fractal a lot, right? So if we just look at this, we got rejected off the 21-week simple moving average, right? We fell down all the way down to the green easy bands. And you could say maybe we got rejected there. We fell all the way down to the green easy bands. Okay, rejected off the 21-week simple moving average. Fell all the way down to the green easy bands. Sideways consolidation. bear market rally. We've broken through the 21-week simple moving average. We may look back and find some support on top of it. It's, occasionally you do that, like we did over here. But otherwise, what we saw last bear market cycle was just a zip right up to the red easy bands. So I do think that a return back up to the bulk of this range here, 30 to 40K, is completely on the table. And then what happened after that, after the bear market rally, was you got a correction. Right, you got your bear market rally, and then you got another mini bear market, which was exacerbated by the March, the 2020 COVID crash. But ultimately, what may cause that is, look, the yield curve for U.S. bonds is still extraordinarily inverted. I think it's still very, very likely that we do get recession or further downturns, some downturn. I'm not saying S&P 500 is going to make new lows, but I think it's very likely that sometime later this year, the base case for a lot of analysts is recession. So I do think that we could come back and maybe test this range again once we've taken a trip up to 30 to 40K. And then we end up going into our next bull market going into March of 2024 in the next halving. So actually, I know I'm not a huge fan of like, hey, this market cycle is going to play out exactly like the last one did. But I do think that this is setting a really strong precedent for what we could actually see, in kind of the way my analysis kind of lines up with what we saw last bear market cycle. So I'm with you there. I do think it's possible, though, that we come back down to maybe test this range in the future. Do a last little gut check before the next cycle.
I want to say that, like, I don't think that we're gonna like go one for one, follow this 4-year cycle. It just, the markets usually trade ahead of expected movements, and I'm always like, hey man, no, it's gonna break this trend. But honestly, dude, it's just like everything's lining up. By the time the U.S. economy kind of gets out of its recessionary period, it's probably right around the same time that we come out of, or we're getting into the halving. And so it seems to be lining up. And whether or not you subscribe to the fact that, hey man, it's a 4-year cycle or not, it's going that direction. It's following it pretty damn closely. Is that are you overlaying the last cycle? Yeah, man.
Yeah, I mean, this is the last cycle, and it's not like I don't know if it's going to line up perfectly. Like, I don't know if we're going up to 48K and then back down to 18, but maybe it's 35K, maybe it's 30K and then back to 20. Maybe it's a little more mild, a little less volatile. Maybe it's more volatile. Maybe people get crazy and they try to retest 70K and it's like another echo bubble, and then we crash down to 30K. I don't know, but as far as directionally and time wise, I actually think we're playing out so far very, very similar to last market cycle, especially with this little part right here, right? This, what you pointed out, where we had that FTX collapse and now we're recovering it, where we just had that large capitulation, the consolidation, and then we're running it back. Very, very similar. Right. Just, this one took a little bit longer. This one was a little shorter. It doesn't add up or line up perfectly, but it's pretty darn close. Like that.
All right. So our kind of topic for today, the big subject, our thumbnail basically, is Logan Paul. And so I think Kyler, you have the article pulled up.
Yeah,
you want to pull it up, but dude's getting sued. I don't think there's any surprise there. But I think this is definitely shaking up what influencers are gonna, the liability that they're gonna have moving forward, say in the next bull market. You wanna go through this one, Kyler?
Yeah. So Logan Paul and CryptoZoo hit with lawsuit as investors take action. CryptoZoo and Logan Paul have been named as defendants in a newly filed class action lawsuit, which alleges they stole millions of dollars worth of purchasers' cryptocurrency via a fraudulent venture. As part of the defendants' NFT scheme, defendants marketed CZ NFTs, CryptoZoo NFTs to purchasers by falsely claiming that in exchange for transferring cryptocurrency to purchase the CryptoZoo NFT, purchasers would would later receive benefits, including, amongst other things, would include, amongst other things, rewards, exclusive access to other cryptocurrency assets, which I think was their own tokens, and the support of an online ecosystem used to market CryptoZoo's NFTs, it wrote. In reality, soon after completing the sale of all their CryptoZoo NFTs, defendants, together with others, transferred millions of dollars worth of purchasers' cryptocurrency to, amongst other places, wallets controlled by defendants, it alleged.
So basically, he's getting called out, man. It was essentially designed, at least the lawsuit here is they're saying, hey, this was from the get-go a Ponzi scheme, promised X, Y, and Z to investors or token holders, quote unquote, or people that just wanted to play the game. Didn't deliver on it. And at the media, at its first onset, when they onboarded any kind of value, immediately left to the wallets of the defendants, here being Logan Paul and also some of the devs. And so there's little argument to be made that they didn't deliver. Now, was the intent malicious? I think that's kind of where, Logan says, hey, no, we never took a penny. So I think that's where we land. What do you think this where do you think this plays out on the kind of on the grand scheme of things when it comes to influencers? Also meme coins. Do you think meme coins are going to rally back? Do you think there's going to be people just trying to rug pull? What's your thoughts on this and accountability for this space?
Yeah, this one's a tough one. I know a lot of people want to raise their pitchforks and rightfully so, but I feel like in this particular case that may have already been done by CoffeeZilla, and I don't know if let's say how this works out legally now that Logan Paul has actually come around and he's hiring people to finish out the project and deliver the project. They may sue Logan Paul unsuccessfully. And then what precedent does that set? So you're trying to take things out on Logan Paul. And like you said, he hadn't taken any money. So I don't know how this works out legally. But regardless of which way this works out, I'm not certain that it's a positive outcome for crypto. I think in this, do I think rug pullers should be sued? Yeah, probably. But in this particular case, because it was kind of already blown wide open, and because it's because Logan Paul, he's kind of come out and apologized and tried to set things straight. But not defending him, but basically if you just look at either Logan Paul's going to get sued and pay some fines. I don't think he's going to go to jail off of this, but if you probably have to pay some fines in some sort of a class action lawsuit. Okay, what precedent does that is that a good thing after somebody's come back and tried to right the right is wrong? I don't know. And then if they sue him and fail to sue him successfully, and what precedent does that set? Does that mean you this was okay, this was a rug pull and it was fine? So I think it's a little bit risky to go after a case that might not be super cut and dry. I think if you're gonna start a lawsuit, you probably want to go for something this kind of more of a slam dunk layup. Just because with Logan Paul, this is going to set precedent for the entire space potentially.
My question is,
I have a mixed feelings on it.
Will SEC also get into this? Will they issue fines? We saw it with the likes of Kim Kardashian, also with Floyd Mayweather. So they don't shy away from celebrities, and if anything, it seems like their go-to target because they're probably not going to try to defend themselves in a court of law and have it be something that's covered on TMZ. So, hey, let's just settle and get this out of the way. I could see something very similar happening with Logan Paul. I do want to give a little love to the chat here. Crypto Billy, he threw a $9.99 super chat, says, tongue punch the like button for Cincinnati Crypto. P.S. Bigfoot is long on eggs. And then he followed up with a $1.99 super chat saying, once again, tongue punch that like button. So big shout out to Crypto Billy, one of our whale members here. Also, if you're new, say hello so we can drop an hola back at you. A couple of new people that we have spotted in the chat. We have That Jut, JD Za, J Daz. Jeez, I'm so bad at it. We got Robert T, Alex Fame, Terry K, Frankie Coda, DRS, Michael Cornwell, and to all of you, hola! Welcome to Sin City Crypto. We are also lacking on that like button. So if you're watching this show, I want you to ponder and think to yourself, have I hit the like button? And if you have not hit the like button, ask yourself, why haven't I hit the like button? Then do something about it. Thank you. All right. What else have we got there? I don't have anything else to mention on Logan Paul. I do think that the influencer is at least gonna think twice before they just YOLO into a hey, let's launch a meme coin. Hey, let's launch an NFT project. I think now people are more aware, like, hey, if we don't do it right, there is gonna be accountability on the back end. One, through your own community, your own loyal followers will be pissed off. Two, you have liability legally in civil court, and if you look at Kim Kardashian, also through the federal branches, the SEC being the main front and center one there. Yeah, man, I think it's an interesting shakeup. Now, also we have Pulse Chain Hex Crypto PX eHex block nodes. Shilling Hex in the chat. So glad to see the Hex community has made its way over here. How you doing, brother? And also we have Justin Musgrave. He says, yo, love the show. Hola!
It's like, I bet I could squeeze another hex in that.
Yeah, I'm surprised. There's a lot of hexes. There's how many, was it 6 sides in a hexagon? What is it? Right? Yeah. There you go. All right. What's our next article there, my brother?
Okay, let's see.
Yeah.
What do we want to cover next?
We're over 100 likes. Okay.
There you go.
See, y'all thought about that like button. Had you thinking?
All right, I got the next one.
All right, what we got?
Got 7 out of 8 key on-chain indicators signaled the Bitcoin bull market is here. 7 out of 8. How do I zoom in again?
Control plus. Yeah, there you go.
I will pinch it.
And also, Rob puts a $2 super chat. He says, how is Larry doing? Buy him a treat. Thank you, Rob.
7 out of 8 key on-chain and technical indicators tracked by crypto analysts. Now, analytic firm Glassnode's recovering from a Bitcoin bear are now signaling that the next Bitcoin bull market might be here. Signals 1 and 2 Bitcoin above its 200-day moving average and realized price. Signal 3 and 4, new address and fee revenue momentum are positive. The 30-day moving average, SMA, of new Bitcoin average addresses creations moved above its 365-day SMA a few weeks ago, a sign that the rate at which new Bitcoin wallets are being created is accelerating, so more wallets. Signals 5 and 6, market profitability is returning. The 30-day simple moving average, SMA, that's good because I actually didn't realize what that was, of the of the Bitcoin realized profit and loss ratio indicator recently moved above 1 for the first time since last April. That means that the Bitcoin market is realizing a greater proportions of profits denominated in US dollars than losses. And signals 7 and 8, just to round it out, Bitcoin balance has moved in favor of the hodlers. The Bitcoin realized hodl multiple has been in an uptrend over the last 90 days, where the R hodl multiple transitions into an uptrend over the 90-day window. It indicates that the USD denominated wealth is starting to shift back towards the new demand inflows. It indicates profits are being taken, the market is capable of absorbing them, and the longer-term holders are starting to spend coins, Glassnode states.
All right. So, Forrest, what are you? I know you're with Sistine Research. What do you take between all these indicators, particularly on Bitcoin and in the crypto markets? Do you put a lot into this wallet addresses? And there's always talk of like, hey, there's record amount of new wallets that hold 1 Bitcoin, record amount of new wallets that hold a fraction of a Bitcoin. And I always just think of all those wallets that all these exchanges have created for all these that nobody uses. Do you put a lot behind wallet addresses and what that means for market adoption and utility?
Yeah, a little bit. I'm more of a price action person. So like if I briefly just go back to the charts here, I'll kind of because I know a lot of these indicators are like moving averages and whatnot, and I do think indicators are great, and I don't think indicators should be ignored, and indicators are great for confluence. But like moving averages, and don't get me wrong, I use moving averages. We look at the 21-week simple moving average and extensions off of it, and the easy bands and whatnot. But moving averages are just like they're lagging. Like they're telling you what the data has already really told you, and or the price action, the candlesticks have actually told you. So like this told us a lot, right? This told us that bear market structure was breaking and price action going through that. That was very, very bullish. So I think a lot of indicators are just now firing off, which is great and probably signals that we very likely get continuation to the upside. Maybe we get that crash, that little pullback. Maybe we don't, but it very likely we get continuation to the upside. So I do think that a lot of these traditional indicators that are well respected should not be ignored. Just like the top signals and the indicators that indicate tops for Bitcoin should not be ignored, because they, like the pi cycle top indicator, it fired and then Bitcoin crashed. Pi cycle bottom went off, and we were very close. If you bought the pi cycle bottom indicator for Bitcoin, I think you bought around like 19K, or 18K. So like you did pretty well. Did it dip down to 15? Sure, but in general, the directionality of these indicators is usually fairly correct. Speaking on chain data, yeah, I think for most cryptocurrencies, companies, stocks, games, blockchain game, anything, chat GPT users, like any product or project of any sort, number of users is a very, very important metric to keep track of. Steppen was the move to earn game. As soon as the number of users, the daily new active users, started to peak and fall down, the entire thing collapsed. The prices of everything collapsed. So like in that particular tokenomic model, like it needed new users coming in. New users coming in at an increasing rate was very bullish for the project, right? New users in most cases equals new money. So when Bitcoin has new users coming in as measured by the number of wallets, I think that's bullish. Now, you bring up good points about like, okay, like you can make, like one person can make 15 different wallets, but that one person making 15 different wallets with 1 Bitcoin each does mean that they're kind of a power user. So like, I think one of the things with on-chain data is like, you do want to be a little bit wary of it, but like you also have a threshold. I think that's why you have a threshold. So like new wallets with over 0.1 Bitcoin or new wallets with over $150 worth of Bitcoin in it, like that could be a signal that, hey, this is a new user that's buying some Bitcoin, getting into crypto, and they're gonna end up bringing more money into the crypto space over time. So I do look at on-chain data, but like you mentioned, you do have to be a little bit cautious depending on what
you're always
the data
the big motto that we have here in crypto is diversify, especially risk. And, if you're holding all of your assets in one wallet, there's more prone for loss, for all to be gone versus keeping it in 4 wallets. And as you see the price of these assets in crypto, particularly Bitcoin here in our example, as you see that going up in the fashion that it did or that it has, holding 10 Bitcoin 7 years ago is vastly different than holding 10 Bitcoin as it is now. 7 years ago, you're probably fine holding 10 Bitcoin in 1 or 2 wallets. And now, if you have 10 Bitcoin, you're like, you know what, let me spread this thing out. Let me at least do 3 wallets with 3 Bitcoin in each one. And this only gets exponentially more. It just increases this whole thought process as you go forward. If you're a whale and you have 1,000 Bitcoin, You'd be foolish to keep it all in one wallet. And so for that reason, you are going to see, that's kind of my premise behind it. You are going to see more of a diversification of holdings, especially when there's no institution that is providing insurance from top to bottom. So you just got to protect yourself, and that's one way of doing it. We are having a interesting super chat battle here, or not battle, or anyways, Crypto Billy once again saying hit the like button, donkey punch it, whatnot, and he also says if you want gift memberships from Jimmy, smash the like button, and then Jimmy just said what Billy said. So and they threw $40 at this whole experiment. So you know what, we'll take it. Thank you guys. And yeah, so moving on, what else we got?
All right. Well, just to add on to the indicators, Bitcoin's 7th golden cross. If you want to pull up my laptop.
Ooh.
Bitcoin's 7th golden cross in 10 years nears what this means for Bitcoin's price. In light of the recent rally that has seen a surge in more than 40% since the start of the year, Bitcoin is about to experience only its 7th so-called golden cross in the last 10 years. A golden cross is a technical event where the 50-day simple moving average crosses north of the 200-day simple moving average. Bitcoin's 50-day simple moving average should move above its 200-day simple moving average in around 1 week. If you were to have bought Bitcoin at the time each of these last 7 golden cross events and held for 90 days, you would have been up on your investment 4 out of the 7 times.
How bullish is this golden cross, my dude? I'm not a charter. Like, is this something you're paying attention to? Is the golden cross? Is this the second coming of Satoshi? What is it? What's going on?
4 out of 7. I mean, we're almost half.
Forrest, what do you take for the? How much do you put into the golden cross? Do you think it's extremely bullish?
Yeah. I mean, look, you kind of, a golden cross kind of oversimplifies what's actually happening. But if you just kind of break down, like, what does this actually mean? What is happening? It's the 50-day moving over the 200-day. That means that price action in the last 50 days, the average price in the next 50 days is about to be higher than the average price for the last 200 days. All that's telling us is what the data, what the price action is already telling us. Most recently, recent data is more bullish. We're breaking out. That's all it's telling us, is like we're breaking out. And a lot of times, by the time you get a golden cross, you're in a bullish trend. So this is just telling us that the trend has flipped from, we were in a bearish market, then we were kind of trending sideways. We took that dip down to 15, 16K or whatever. But most of the consolidation was sideways between like 15 and 20K for a while. And now we're establishing a bullish trend. Now, this bullish trend could be cut short by a crash in the S&P 500. It could be cut short by this, that, or the other. There could be, again, we still have Grayscale and DCG that has some uncertainty around it. So this bullish trend that's been established, it could be cut short, but the market doesn't think it's going to be. The market is saying, hey, this is, we're in a bullish trend now, we're moving up. And I think the most likely, the trend is your friend. It's you usually don't want to bet against the trend. So it's like, we're coming off the bottoms here. Why be bearish right now? Maybe that's the right thing to do, and maybe we get a little correction, but I just think a lot of these indicators should be respected. Like if you respect a lot of these signals, you're going to be on the right side of things, more often than not. So while the golden cross, I don't think is a silver bullet, so to speak, or a golden bullet, and going to be right 100% of the time, like that article said, it's like right 4 out of 7 times. But 4 out of 7, like with good risk management, is really solid. That's a good win rate. So why would you bet on 3 out of 7 when you can bet on 4 out of 7?
So kind of pivoting the discussion. So the Justice Department, and I know we've kind of talked about it before, but Silvergate, and they are basically the liquidity provider, the on and off ramp between your users and also the exchanges. So when you trade your fiat into crypto, the bank that probably did that was Silvergate. Taking a look, we have Silvergate Department probes Justice Department probes Silvergate's relationship with FTX. This is all per Bloomberg. And The Justice Department's fraud department has begun probing Silvergate's handling of the accounts of Sam Bankman-Fried's firms. The fraud probe is focused on potential criminal wrongdoing in allowing FTX's deposits, including users' funds, into Alameda's accounts. So kind of puts an interesting thought into, hey, you knew what FTX was doing, yet you blew no whistle or raised any flags. Senators have also reportedly questioned Silvergate's conduct, calling the bank's role in managing funds related to FTX as an erroneous. How do you say this damn word?
Erroneous
Failure and
egregious.
So,
Egregious is that?
do you hold any accountability when it comes to, because the whole decentralized nature of crypto is supposed to be that, hey, we're controlling our finance. We're the ones we don't want the government to step in. We don't want big institutions to step in. However, this is in the backyard or privy to the custody and the management of these banks and large C5 players, particularly FTX here in this example. Do you think that Silvergate should have blown the whistle? Do you think they should have discussed what was going on and the implications of it to, say, federal regulators, the SEC, the Treasury Department, CFTC? Do you think they should have discussed it? Do you think maybe they did and their warnings fell on deaf ears because of the campaign donations from Sam Bankman-Fried? What do you think the role of Silvergate is when it comes to FTX?
Maybe they were complicit. What was the main thing with Silvergate? Was it the fact that they were depositing into Alameda instead of FTX? Was that the predominant thing that should have?
Yeah. So because they are essentially the fiat to crypto, and they provide the wire transfer rails. So basically, it's the bank that they were using to move money around from one to the other. And they're publicly saying, FTX is publicly saying that these two companies are separate. Alameda Research is separate from FTX. We do not commingle funds. And there's a obvious paper trail here. Here is a deposit, a wire transfer of customers' funds, leaving a traditional bank, say it's Wells Fargo or Bank of America, and it goes to FTX, and then you see that money immediately leave for Alameda. And publicly, FTX is saying this doesn't happen. But Silvergate has the receipts, and whether or not they ignored them or maybe they just didn't even care to look at it, supposedly all those transactions were transparent, at least for Silvergate, and they should have been aware of the fraud practices, and they did nothing about it. And they're trying to hold, the Justice Department is trying to hold Silvergate accountable. So
on this one, I know there's been so many bad actors in the space, and it just has become so easy to point our fingers and demand justice from someone, because it's oh, you think Silvergate could have come in and prevented this big catastrophe, but were they actually committing fraud? Or would this have actually I find it hard to blame Silvergate for this entire thing. And the analogy that I'd use is all right, let's just say I was selling drugs on the side, right? This is my side hustle aside from Sistine Research was slinging some drugs on the street corner. And I bank with, let's say I bank with BB&T, or let's say Bank of America. And I go into Bank of America and I'm depositing a ton of cash, drug money. Is it their responsibility? Are they complicit when I eventually go to jail for selling drugs? Are they complicit for not flagging the amounts of cash that I was pushing in? And maybe sometimes they would flag that amount of cash. Maybe that would go on through to the IRS in some way or another, and maybe I'd get flagged. But are they? Is Bank of America at fault? For someone dying because I sold drugs to somebody and they didn't flag me for the amount of cash that was going in, or and I was commingling between my business and my personal, and just some shady stuff was going on from a banking standpoint. I find it hard. I painted myself as a drug dealer here, but
Hey, man.
like
You did it
No,
to
the
yourself,
market,
bro.
the market is down, man. You got to take your profits and whatever,
you gotta
whatever
Gotta have a
market-
side hustle, bro. And times are tough.
It's like there's so many people involved in this. It's so easy to like point the finger and just demand that like, hey, they're at fault, they're at fault, they're at fault. But on this one, it's just like, if I'm Silvergate and you've got a ton of different clients, and it's like, is it really your responsibility to dig into what your clients are doing, or are you just there to service a customer? And I got to think that they're just there to service a customer on this one. I know it's a little bit, the analogy between a drug dealer and an actual like corporate bank is a little bit different than the relationship between Silvergate and FTX, but it's hard for me to point the finger on this one. And maybe I'm missing some key information, but that's my take.
Yeah, I think that regulators and like the Justice Department here, I think they're just looking for accountability, and there's only so much you can do. Sam Bankman-Fried's already, going to court. They've already holding him accountable. And so I feel like they're trying to get more answers. They're trying to point the finger at more people because people are pissed off. And is it the right thing to do? I don't know. I think people are just overreacting. Guys, what do you think in the chat? I know we put it up here in the text format, but do you think Silvergate, because their stock is down 90% or something, I don't know the exact percentage, but way down from its all-time highs, and they're getting investigated by the SEC, they're also getting investigated by the Justice Department, and so do you think that Silvergate will be around? Put a 1 in the chat if you think they will go under. Put a 2 in the chat if you think what is it? Yeah, one. Yeah, 1 if it'll go under, 2 if it'll be fine. It'll be business as normal in the next bull market. Yeah. So I also had a poll on Cardano here. Just kind of get the temperature in the room. We had, are you bullish long term on Cardano? We had a resounding 88% are bullish on Cardano here. The chat tends to be some Cardano maxis. Also, we have Tidal Metal Rocker. Also is here, and Philip, Andre Cabrera, and J-Daz. To all of you, hola! Welcome to Sin City Crypto. And then, of course, Jimmy dropping the 10 gifted memberships, the Sin City Crypto hype man himself. And then, yeah. So.
Right on. Well, just a quick little hit here on you today. Apparently, it's getting a little buzz. Lex Friedman was on Joe Rogan's podcast and kind of dabbled a little bit into the crypto space. And Charles Hoskinson had been on an interview and on Lex Friedman's podcast. If Charles Hoskinson...
That was a good one. That was a good one, too.
It was good. It was long, like 3 hours, 3+ hours. If Hoskinson can make it onto Rogan, which is just a speculation here, because he really didn't go too deep into it.
You think you get the Coinbase effect? Where you get a listing on Coinbase, you go because Joe Rogan hasn't had a crypto.
No, he hasn't had anybody. Nobody big.
Andreessen, or he had Horowitz. I forget which one. One of those.
Andreessen.
Mark Andreessen. Yeah,
that was a while ago. That wasn't anything.
They only really talked finance. I'm curious to see what the Joe Rogan effect would be if he talked to someone in the crypto space. So
I feel like it would be pretty big.
I would love Cardano to just like flip everything, just go through the roof. The Ethereum maxis and Bitcoin maxis.
Oh, they would be so mad.
Their minds. They'd be so mad. The Doge maxis, they'd be so pissed off. They would just, yeah, it'd be amazing. And I don't even hold a ton of. I don't even know if I have any Cardano right now. I'm an ETH guy, but I would just love the havoc that would wreak in the market.
Dude, well, I think like if you had to put, you had Vitalik, you could bring him
who
on.
would you rather listen to?
But yeah, like who would Joe Rogan rather have a conversation with? It's definitely Charles, man. That dude's he pushes back on a lot of political ideologies.
His ability to articulate what's going on. He's been around for so long.
The Vitalik interview with Lex was good. I mean, like Vitalik,
it was.
he's super like nerdy, but like he holds his own in interviews, and like I'd love to see both. Maybe one could lead to the other.
I'd like to see Hoskins first. I'd rather listen to Hoskins than Vitalik any day. Personally, I mean, he's just the way he's been around the space. He's so.
That would be a nice one into.
Yeah. What does the chat think? Would you rather see Vitalik. If you had to pick one or the other, one for Charles, two for Vitalik? Who would you rather see sit across from Joe Rogan on the on his podcast? I think Joe Rogan probably is the strongest podcast, right, or the biggest community.
Yeah, he's number one, hands down.
Yeah.
Number one. Yeah, no one's even close. I want to see Sam Bankman-Fried. No, I'm just kidding.
That's great. That poor dude, man. He can't keep his mouth shut.
I have a feeling if Sam Bankman-Fried went on Joe Rogan's podcast, I think Joe Rogan would be like, "What the hell are you doing, man?"
Bro, he would grill him.
He's like, "How many bitches were you sleeping with over there in that mansion?" He's like, "What was going through your mind?" He's like, he would have no problem discussing drugs and alcohol and sex, and he probably would go down this weird rabbit hole with him. And I think that would be if we could choose between the three of those. I'd want to see FTX. I don't think that's good for our space, but it would definitely be extremely
get the
entertaining.
most views.
Yeah. I wouldn't be, what his media kind of traveling circus that he had, where he was on Twitter Spaces, and he was on CNN or Fox? I don't know. Anyway, he was on every media outlet,
Dude,
every social media
panic,
channel.
He was just trying to get out there and like make any good press that he could, and was just digging himself a bigger hole.
I don't know. I could see him going on Joe Rogan. If Joe Rogan reached out to him, I don't think he would pass up on it. Maybe I think his lawyers would be like, hell no.
Well, they haven't been able to stop him yet.
That's what I'm saying. Yeah. All right, Forrest. Anything else you want to talk about before we let you go, or anything exciting going on in the cysteine research department there?
I've got and bad timing, because blockchain gaming's already kind of seeing a bid where we're seeing, Treasure, or I'm sorry, Magic was the one that you're pointing out earlier. That's a blockchain gaming play.
Yeah, what is that about?
Bottom. So Magic, I'm not an expert on it, so it's actually interesting. So it's like a cross game cryptocurrency. So like, you could play a game and earn Magic tokens in one game, and that's used as the in-game currency. But then you could take those same Magic tokens and they work with another game. So like, if you have a whole web of 50 different video games and metaverses that use the Magic token, then that token is not subject to just one single game. It's or not sequestered to that one single game. So it's kind of interesting play. It's doing really well. But on the topic of blockchain gaming, later today, it's looking more and more like tomorrow. I need to edit and add some more pieces to it. I'm going to be putting out a research report on the blockchain gaming space. It's not like particular projects, and it's more, how do you approach the blockchain gaming space to make sure that you maximize your chances of making money and minimize risks going into the space? Because in my opinion, a ton of people are going to lose a lot of money on blockchain gaming. Like, if you bought into STEPN at the wrong time, you got wiped out clean. It went to zero in a flash. And a lot of games, I think, are gonna if they cannot hold their player bases and they don't have good tokenomics, we're gonna see that hype cycle blockchain gaming narrative, and then it's just gonna fall off a cliff. So the entire report is basically breaking down strategies.
What's your first gut reaction when it comes to blockchain gaming and kind of its future? You think it's a distant future? Do you think it's next bull market? Do you think that it's kind of irrelevant and just people are speculating on something that's never going to materialize? Like, what's just like your just short answer on that?
Yeah, it's going to be like a lot of things. So it's going to be like the overall crypto market. 99% are going to be bad. 99% are probably going to go to zero, but you're going to have some really interesting, cool ones pop up. One of the areas that I'm most bullish on is using NFTs as cosmetics or skins for certain games. So it's billions and billions in revenue every year. I think it's like $5 billion a year in revenue from Fortnite skins. Like they just sell, like you can play as a different character. It's still the same game and there's no advantage, but imagine if you could take your Bored Ape or your D-God or your Ute or whatever your NFT PFP is and license it out to Fortnite and sell that as a cosmetic skin for the game. Same thing with, Call of Duty or potentially, whatever big blockchain game metaverse kind of comes next. So I think that's going to be a really big market that's going to add some utility to existing, NFT projects like these 10K PFP collections. But my general thesis is that most earnings for blockchain games are just going to approach minimum wage or slightly below. Same thing, like that's what happened with Steppen. Is eventually like the $1,000 per day rewards they don't last. That's just because a lot of hype is coming into the space, a lot of FOMO. But ultimately, if you just look at it logically, if you can make $1,000 a day playing a video game, everybody's going to start playing that video game and dilute those rewards until it drops to about minimum wage, right? Because if you, or maybe a fraction of minimum wage, maybe 80% of it, whatever the trade-off is to actually go to work versus sit around and play a fun video game. So I think there's going to be a big hype cycle. There's going to be opportunities to like make a ton of money. I think we're going to see like what happened with Steppen play out with like 15, 20, 25 different big games. And there's going to be a lot of opportunities to ride that hype cycle and get out. But I think a lot of people are going to lose money buying into video games, thinking, I'm going to get rich. And then they don't realize that these $1,000 a day rewards don't last for a long time.
And when can we expect that you said it was like a research or a newsletter? Or?
Yes, it's going to be a research report in the research hub at Sistine.ai. I'm trying to get it out today, but it'll probably be tomorrow. Trying to get it out today, probably be tomorrow. I want to add just like a little watch list of projects that could be interesting. So I'm still procuring that watch list. But otherwise, it's mainly about strategy of how to approach the blockchain gaming market and not lose money and hopefully make some money.
I'm be excited to check it out. Definitely we'll go through that one as soon as it's out there. And also recommend to the chat, do the same as well. Go support Forrest, Sistine Research. Check out some of his insight because I'm not too well versed in gaming, even though I'm a big gamer. So I'm sure you guys could also use a little outside input as well. Now, Forrest, well, thank you so much for visiting us, and we'll catch you Monday via your video, and then you'll be joining us live again next Friday. So, thanks again, and till next time.
Good to see you, brother.
Peace.
Hey guys, thanks so much for having me. It's always a pleasure. Peace.
Thank you.
Later, brother.
All right.
All right.
Man, are you bullish on blockchain gaming?
Something's gonna pop. It's gonna happen. I think there's too much capture in the current one. So, I mean, I saw someone said, why don't we mention Illuvium? I mean, the problem, we brought this up with Gala. It's that you got to make a good game first. It needs to be functional. It needs to be something that people want to play. And then once they get in it, then it'll take off.
Illuvium is like scratching the surface of what NFT gaming should look like, but it's not quite there. It's like PS2 and like PlayStation 2 graphics and kind of the feel. And
you think AI could start amplifying it, like make it quicker?
No,
with
I think you still got to just build
Unreal Engine and stuff like that.
Unreal Engine 5.1 right now is ridiculous, bro.
Yeah,
what they can do, but the problem is that you need these high-end graphic cards. Like you can't go more than one generation back and still run the graphics that these Unreal Engine and some of these other softwares are using. And with time, this sector will look better, but I was just thinking it was going to happen faster, man. And the rate of development, I mean, even some of these iPhone games, they're looking crispy, man. And I'm looking
at on iPhone, it was pretty fun to play. The graphics seem pretty good.
That's what I'm saying, man. Is like if you can do that with an iPhone.
Now, do you think?
And I know these are technically supercomputers, but if you can do that with an iPhone, I mean, you could. I'm just expecting more out of the blockchain gaming as far as the visuals and also how it runs. Sometimes it just seems clunky. You see the character running around. They're like,
You think it just takes too much money up front to actually like pay the developers?
it's a lot of a lot of these
takes a lot of
studios.
time.
Well,
You gotta have a concept. You
about
gotta have all the art. You gotta have all
the
that.
studios take years to develop, and I think
Right.
that they're just. I think the problem with crypto is that it has to come to market fast. You know, basically, you put out a trailer, you come up with buzz, and you're trying to get a ton of people to invest in it. It's not like a traditional investment, and so traditional investment, you got stuff drawn up on little pieces of paper or whatever it is, or on a PowerPoint slide. You present it to some venture capital companies. You say, this is our vision. They invest, and they're not sitting here banging the door talking about where's my money at 6 months down the line. And that's the problem with crypto, is that they're trying to deliver something too fast to appease the community that was early buyers of the coin.
Yeah, see, that's what I felt like Gala might have had a problem with.
I think that's
where it
just
was like too
blockchain
much
in general.
fundraising and not enough actual product.
The whole ecosystem, I think, is I think the mentality is that if you buy a crypto, you're expecting returns within the next 6 months, and to build a quality video game, it's 3 to 5 years generally. And so I think that's where the disconnect
I think
is.
AI could speed that process though.
It could help.
I think of like the
It's a tool.
tools that it allow the developers though.
It's still a tool.
If you
It's
could
a
use
tool.
if you could use them, like I just played Age of Mythology. Have you ever played that?
No.
So it's like it was an early like strategy game, but they had so much scripted to it, and they had to like create these worlds, and everything had to be like perfectly meticulously done. But if you have AI that could just generate like NPC talking points, I mean, it could be speed up things.
Yeah. I don't know. I think builders just got to build. And I think they just need to put the time in, man.
Work.
Can only do so many shortcuts. All right. Well, anyways, we're going to shortcut right to this outro.
wait,
Are
real
you
quick.
finger tornadoing over here? Or what's going on?
I wore. I know we got like 2 viewers from Montana, so I wore my Big Fork Montana shirt.
Oh, okay.
So you tell the other 6 people in Montana that know about cryptocurrencies, and we'll get them all in here.
Also, a big shout out to someone. It's actually not just me saying someone. It's actually the person in the chat named someone. John Foster Crypto, overcome Tyler Foster. To you. Hola! Finger tornado, let's go.
Woo! It's Friday. Friends, family, friends. Well, thank you for watching Sin City Crypto. On behalf of David, who's not here, hopefully his son's doing well in his soccer game. Robin, Rocco, Macho Guy. Thank you for watching. Tune in next week and on Sunday as well, right? Sunday,
Q&A with Big Rob.
Q&A with Big Rob.
And
then we'll have a night wrap up on
time.
Monday as well. So thank you for watching. Thank you for staying around. Thank you for being a part of the community. Love you guys. Peace.